Good evening, everyone. It is my pleasure to be introducing our today's speaker, Dr. Haresh Tolia. Dr. Haresh Tolia is a practicing family physician for the last 40 years and an avid learner of equity markets. He has a family legacy of medicine and equities. His father, a leading medical practitioner himself, and in his days, an authority on equity investment among his medical friends. So, the conversation around the dining table would revolve around these two topics, medicine and equity, and that fueled his passion and his interest in both of them. In 1983, he started practicing medicine, and as a family practitioner in Mumbai, his afternoons would be free. So he would go straight from his clinic to the stock exchange. In the days before SEBI, the regulator, before online trading, before easy information, before the internet, he learned firsthand from his visits to the stock exchange the nitty-gritties of the working, the way information flowed from the company to the brokers to the investors, the psychology of brokers, how big brokers thought, how small brokers passed on information, how traders, how jobbers, what are the functions that each of these played in stock market where there was no online trading. It was all on the floor of the market. He collected and poured in those days over actual company reports. He used to collect hard copy of these company reports and learned financial analysis and learned the art of picking the right stock among the plethora that was available. His doctor friends would pick on his brains to get tips on good investments, to get their own portfolio, which they might have bought based on tips or inherited, analyzed. In 2008, a few of them got together and requested him to formally teach them the workings of the stock market, how and what to invest. By this time, all of them had become middle aged, had some time on hand, had established their practice, were making good money, and so wanted to really learn the money management. He started inviting them home in the afternoon, and over cups of tea and coffee that his better half kept generously flowing, he shared his knowledge. This awakened in him the teacher, and his home was always open to anyone who wanted to learn finance. His passion for learning kept pace with the changes in the stock market, the regulatory changes, the newer mutual funds coming in, SEBI coming in, everything going online, DMAT happening. He kept pace with all these changes in terms of technology, flow of information, and he kept himself updated. He added technical expertise to his list of knowledge base, and now he could teach not only what to invest, how to invest, but also when to invest. In 2020, with the advent of COVID, his medical colleagues who were all now working from home, consulting from home, found that they had time to, and technology was available, so they could use that technology to have some formal structured lectures. That thus started the series of fundamental analysis, the lecture series that Haresh Bhai has been conducting and mentoring for now for 5 years. He started with small group of doctors. They leveraged the technology to gain financial literacy. His pro bono interest in teaching, in ensuring financial literacy for his friends and colleagues who all know how to make money, but also need to know how to manage money for a happy and peaceful retirement and for fulfillment of their life goals. His lecture series became very popular, and besides doctors, even total strangers would contact him to join his groups or to request him to start series for their groups. Today, he has students from different professions beside the medical profession, like CAs, financial profession, students, lawyers, engineers, homemakers, and the geography also varies. He has students from US, UK, Singapore, Dubai, all joining his lectures. The financial professionals would want to join his lectures because even if they had the theoretical wherewithal for fundamental analysis, they came to him for his practical guidance, for his on-ground experience in the stock market and his approach to investing. His early students have now today become mentors themselves, have become experts, and under his guidance have started teaching others to be financial literate. That is Dr. Haresh Tolia's legacy, his selfless and pro bono spread for financial literacy. Thank you so much, Dr. Tolia, for teaching all of us, for bringing that financial literacy to our life. And over to you, sir.
Thank you, ma'am. Thank you so much, ma'am. Doctor, we can proceed.
Haresh sir, you're on mute. Yeah.
Good
Yes,
evening,
doctor.
everybody.
Yes, doctor.
Here we'll be discussing about basics of fundamental analysis, and then we'll be discussing about fundamental basics of stock market, and then fundamental analysis in the of a company. So I request Maria to start the presentation. Hardik, Maria, please start the
Sure, sure.
presentation.
Sure, sir. Sure. Is the screen visible to all?
Yes, sir. It's visible.
Okay, Maria, it is seen, properly seen. Let us go to the next slide. A basic introduction which Kavita has told you. Now let us go to the next slide. Uh, just for the sake of knowing the history, it was first stock exchange it started at Amsterdam in 1602. Okay, in our stock exchange, the Bombay Stock Exchange, had started as early as 1875. The National Stock Exchange came up 100 years after the Bombay Stock Exchange. So when we are studying the uh, basics of stock market, we should know a little bit of what is stock exchange and what is the function of stock exchange. It is not only the shares that we trade on the stock exchange, we also trade bonds, government bonds. We also trade commodities. So today we are going to concentrate only on shares. We are not going to discuss on bonds and commodities, uh, which is also traded on the exchanges. Nowadays, previously the SEBI was not there. Now SEBI is there. The SEBI is giving the guidelines, and everything that is on the exchange, the brokers and all the people involved in stock exchange are given are controlled by SEBI. Like they have given the instruction that these guidelines have to be followed by everyone. Okay, next slide, please. So, what is the need for stock market? Need is because when companies start, maybe they start with a small amount of money, which the promoters can afford it, and they can get a loan from the banks. But when they want to expand after a certain level, they need to come to stock market to get more money from the people. The people become the partners in their company, and their equity base can rise. So this is why stock market is required. Promoters needs some money, some partners, and they approach the public to become partners in their company. So this is where stock market comes into picture. Okay, and as SEBI is guiding them, SEBI is making all the rules and regulations for the brokers. This is clear, right? Okay, the next slide, please. So there are different types of stocks available in the market to invest or to trade in, and these stocks are categorized on the following criteria: market capitalization, ownership, fundamentals, price volatility, profit sharing, economic trends. Market capitalization is uh, uh, what are the three types of shares we have in the market: large cap, mid cap, small cap. Ownership means private or it is owned by the government. Like that, we can categorize the stocks into various categories. Let us go to the next slide, please. How does it operate? The stock market, how does it operate? How does it benefit the company? How does it benefit the investors? As I told you, the company needs uh, partners because they want to increase their capacity, they want to diversify their products, they want to scale up. So they need money and they don't want more debt from the banks. Banks also will give up to certain limits. After certain limits, bank also will refuse. So they do not want to increase their debt and they will invite as partners. So it will benefit the investors also. If we select good companies, then we will get good dividends. And as the company grows, our share price also will grow. So as we have shown here, historically, the returns given by stock market is more than 10%. It depends upon the individual how wisely he is investing in the stock market, and maybe he can get more than 15%, 20%, something like that also. Okay, the next slide, please. On the stock market, there are various types of trading methods happening there. So some people are investing as a day trader. They buy in the morning and they sell in the evening. They are day traders. Like that, there are different types of traders on the market. Some buy depending upon the position. Okay? This is the position of the market, so I'll buy or sell accordingly. Some buy on momentum. Momentum is, you can say, how fast the volume and the price are rising. That is momentum. So depending upon the way you understand the market, your choice of investment will depend, and that's how you can do the uh, investing in the share market. Usually, doctors, I would prefer that we should do long-term investing and we should not be involved in day trading or something like that, because day trading might be little risky or maybe time consuming, and we as a professional, we are busy with our patients during the trading hours, then that will not be suitable for us. If somebody is interested in day trading, then we must be doing his consultation only in the evenings, while trading is happening from 9 to 3 o'clock. That time we should avoid this consultation. We should not mix up the two things. Next slide, please. So when you have invested in stock market, what you will get is dividend from the shares you have invested. That is the reward which the shareholders get if the company declares the dividend. And there are some other criteria also which you have to know about the stock market or the uh, Bombay Stock Exchange and the National Stock Exchange. That is the index. Index is a rough idea as to how the first 50 companies are moving. Either they are moving up or they are moving down. So you get a rough idea as to in which direction the economy is going. There are some people who think that the market will go down and they try to behave in that way. They are called as the bears. And some people who think that the market is going to go right up and they are called as the bull. So every day there is a tough fight between the bears and the bulls. Sometimes the bear will win, sometimes the bull will win. So as I said, Nifty and Sensex are the two uh, indexes we have in India. Nifty has got 30 shares and Nifty has got 50 shares and Sensex has got 30 shares. So the first topmost where the volume is very high, most shares are taken into Nifty. The volume is very important over here. Volume of the shares traded, if it is high, they are moved to the Sensex or to the Nifty. Right? Let us go to the next slide. These are certain terminologies in the stock market. Hardik, can you take us to the Bombay Stock Exchange site?
Sure, sir. Sure.
Yes. So let us visit the Bombay Stock Exchange site and we'll see some important things over there.
So the volume is very low, sir. The volume, what is peak? Can you increase it, sir? Like maybe the
Voice is very low.
yes, sir.
Others are also feeling the same thing.
Yes, sir.
Yes, sir.
Just a minute.
Is this okay now?
I think the previous is better, sir.
Better.
Previous was better.
Yes, sir. Yes, sir.
Okay, then we'll continue this way only.
Yes, sir. Yes.
See, we are at a Bombay Stock Exchange site, and this is the home page. And as you can see in the home page, there is about BSC, investor relationship, market, applications, corporate members, and investors. So let us go to investors. In investors, we are investors and we should be aware of these things happening in the stock market. Investor services are there. Investor, if he has a complaint, he can go to this place. He get a detail as to how to make a complaint. Equity derivatives, if he wants to know about it, there is a place where equity derivatives and disclosures will be shown. Then that see at the bottom, you see investors awareness and educational PowerPoint presentations. Hardik, please show that with the arrow. Hardik, please show with the arrow. Investors education. This is the place, and Hardik, click on the first thing, introduction to the stock market. Yeah. So everybody should try and go to this site and get the first-hand information given by the government of India, given by the SEBI or the stock exchange. I mean, whatever information is available here is the real information. Like at other places, you might get some wrong information and something can be not be proper. Let us go to do's and do nots of buying in stock market. Hardik, can we go to the do's and do nots of buying into stock market? There on that page only it was shown. Go back on that page only it was shown.
Is it on this page, sir?
Introduction to share market. Introduction to the share market.
Introduction to security market, sir. Uska, that presentation.
So here we see how to invest in IPO. Things are given like that, you know. So
Yeah.
if somebody is very new and wants to learn about share market, what is the meaning of right issue? Instead of going and trying to do it something in a wrong place, it's better that we study here. What is the meaning of dividend? What is the meaning of bonus? Everything is given over here. You can see in the investors awareness. Fourth one is on the right issue. Fifth one is about dividend and bonus. Then after that is how to buy and sell shares in stock exchange. They will show you what precautions also you have to take. Like you always go through a registered broker and you don't go through anyone else other than registered people. How to invest in mutual fund. Okay, now let us come back to the our PowerPoint presentation. So I have shared this information here. What is the term Sensex mean? Most of you must be knowing Sensex, SEBI, DMAT, trading. I'm not going into the definitions of all that. I've already shared this description and PowerPoint presentation. So if you have any doubts, you can go find out from there. The next slide, please. What is the bid price and what is the ask price? I mean, if you're investing in the share market, you know what is the bid price, what is the ask price, what is the meaning of IPO. Next slide, please. Call and put options. Very few people, new people must be doing call and put options. They are for traders, and if somebody is interested, we can go into the details of what are the strategies of call and put options. Usually, I do not teach call and put options to our doctor community, and I avoid that. Moving average is a technical analysis tool, and those who are studying technical analysis, they will know about the moving averages. Okay, the next slide, please. Now we are coming to fundamental analysis. Fundamental analysis. What is fundamental analysis? Is the definition is by definition we say fundamental analysis is the method of evaluation of the intrinsic value of a security by examining the related economical, financial, and other qualitative factors. This might be difficult for everybody to understand, so let me try and help you. Intrinsic value, what is the intrinsic value of a share? Does anybody know about it? Can anybody throw some light on it? What is the intrinsic value of a share? How to calculate a intrinsic value of a share?
Is it at what price it started with?
I beg your pardon?
Is it at the price it started with? Like it lists on the exchange at a certain price. Listing price, is it that?
Say,
Is it the book
intrinsic
value of
a
the,
share is the price at which we actually should buy the share. If it is below the intrinsic value, it is good, and if it is much above the intrinsic value, then it is overpriced. You must have heard the terminologies from uh, the mutual fund or the broker's house. They say the share is outperforming or
We exit it
Haresh had some problem. He's rejoining just a minute.
Please excuse small network issue. It will be reconnect joint.
Haresh sir, you are on mute.
Can you hear me now?
Yes, doctor. Yes, doctor. Please proceed.
Now, voice is clear?
Yes, sir.
Okay. So we are talking about the intrinsic value. The intrinsic value is directly proportional to the earning or share of the company. Can you hear me? Intrinsic value is directly proportional to the earnings of a company.
Yes, sir.
Yes, sir.
And it is directly proportional to the growth of the company. So if the company is growing, this intrinsic value, the share price of the company will increase. And it is inversely proportional to the yield for 10 years. So when the yield goes up, the share price starts falling. Okay. So that is intrinsic value. What is the objective of doing fundamental analysis? We are trying to predict the future of the performance or the movement of the share price on the basis of the current data available to us. Current data, the past data, as well as the future expectations of the earnings also is taken into consideration. The expected earning is going to rise, then the share price are expected to rise, and you'll see in the market the share price goes on increasing. The future earnings also is important. What does the market think about the company's earning? If they think that the company is not going to earn as it is earning today, then the share price will start falling. Is that clear?
Yes, sir. Yes, sir. It's clear.
Intrinsic value and the share price, how they are connected. Okay. So if we have this type of knowledge of intrinsic value, then maybe we will not purchase shares which are poor price, and we can avoid some of the speculations which are done in the market. There are people who are doing speculations, and they rig the price, and the price goes very, very high. So in this case, if we know about the intrinsic value, we know about what is the performance of the future of this company, maybe we will not enter into those speculative type of
transactions which are going on in the market, and we can avoid our losses in the market. So we can go to the next slide. So there are two types of analysis. Quantitative analysis depending upon the fund numbers, and financials. So what is the information? Where do we get the information? We get it from the annual report or the quarterly reports that are posted on the our annual reports can be seen on the SEBI site or the BSE site. Even the quarterly results are available on the company site or the SEBI site. So, okay. So this is the source of information, and depending upon how is the performance likely to be in the future, that's how we can adjust our investment in the market. The company is going to do good. If the numbers are showing that the company is likely to do good in the future, then we can invest and stay invested in the company. If the company is likely to go down because of some reasons, because of government policies or because of increase in raw material price, and if you feel that the growth of the company is now not going to grow well, then you can take precautions and you can avoid losses. That is numbers and financials. There is other way also, that is trying to find out who is the promoters, who are the people in the management, what products they have, are the proprietors, the company owners, good people, they have reputations, their past performance was good. They were giving good dividend in the other companies which they had started. They never cheated the shareholders. This type of reputations, if the company has got, then we can invest in this type of shares. Management, if the CEO is very clever, and if he can take all the precautions to see that their products remains in demand, he continuously does research, spend money for research, and try to invest, try to find out new ways to improve the products, then that company is a good company. The brand name is good. If the brand is doing research and trying to be having a market share which is from the higher side, then that is a good company, and we can stay with that company for a long time. So these are the two ways to analyze the company. And here again, you should know what is the data source, and you can read it from the news, industry journals like Dalal Street and Capital Market, or you can read it from the interviews the CEO gives on the channels, CNBC and other channels. Okay, these are very important things. We learn about qualitative and quantitative analysis of a company. If we know the qualitative and quantitative analysis of a company, then we'll be sure whether we should stay invested in a company or we should not stay invested in a company. If we don't know about the brand, we don't know about our product, we do not get the confidence to stay invested in the company. If we know that the product is good and the brand is good and the brand is capable of doing fairly well in the future, then we can stay invested. I'll give an example here of 3M company. We are using 3M products. When the COVID was there, mass of the company was available at a very high price, 600 and above. The same mask made by some other company were available at 60 rupees and 90 rupees. 3M company is a manufacturer of our stethoscope. That stethoscope value is nothing is available below 10,000, but still most of the doctors who are doing clinical practice prefer using that stethoscope. I'm talking about Litmus stethoscope. So if you are invested in a good company like 3M, and if you stay invested in a good company like 3M, 3M does not have a competitor. Have you heard the second best stethoscope? Who is the manufacturer of the stethoscope? Second best manufacturer of stethoscope? Or have you heard any brand where N95 masks are very, very good compared to the 3M brand? During COVID, most of the doctors used to prefer 3M brand. Consultants who were exposing themselves to COVID patients were using the best brand available. Cardiologist would prefer a Litmus stethoscope and he would not even know which is the second best available in the market. So these factors, if we know, then we can hold on to the company for a long time, right? So let us go to the next slide. When we talk about the financial statement, we have to check the balance sheet, the income tax statement, the cash flow. This is the most difficult thing for the doctors. As a doctor, we have not learned how to read a balance sheet. We don't know what is the asset, what is the liability. We do not understand properly the assets, about the assets and liability, but we have to make efforts and we have to start understanding what is asset, what is liability. We should be able to read the income tax statement. Income statement, what is the sales, what is the net profit, how much is the depreciation, or how much is the expense, and all those statements which are given in the profit and loss statement, we have to understand. Cash flow. Most of us who are beginners will not understand the value, the term cash flow. How much cash is coming to the company and how much is it able to have throughout the year, the cash with the company throughout the year, right? These are the things which we have to learn if we want to understand the fundamental analysis of a company and if we want to be invested in the company for a long time. Traders did not learn this. People who are going to do trading, day trading, they did not bother about these things. For them, the financial statements are not so important. So if someone of you is only interested in trading, then this is not a thing which you have to learn. Okay, the next slide, please. The key ratios. You must have heard, all of you must have heard earning per share. What is earning per share? Total net profit divided by the outstanding shares of the company. That gives us the ratio earning per share. So if you see a company whose earning per share is rising, then you can definitely think of investing in that company. PE ratio gives us the information as to how many times we are paying more uh, compared to the earnings. So this is a difficult thing. I mean, you cannot generalize a P ratio of above 35 is bad or a P ratio below 15 is bad, good. You cannot generalize. You have to go deeper into it and understand what is the ratio of this company, particular company, compared to the industrial P ratio, and what is the average P ratio for last 3 years of this company. All this you have to see, and then maybe you can come to a conclusion whether the P ratio is good or bad. Debt to equity ratio. As I told you, when the company is expanding, it does not want to increase its debt. They try to come to the public and increase the equity so that the debt remains on the lower side. But in some companies, they might be having a high debt also. So we have to see that if the debt to equity ratio is high, then we have to be careful. And how do you calculate that debt to equity? It is total liability divided by shareholders' equity. ROE is a return on shareholders' equity. Okay, so can we go to the next slide? Management qualities that we were discussing now, it should have a very good management qualities. Like anytime any company whose managers are good and who are able to take the right decision. Sometimes the right decision is to close down a sector which is not functioning properly, or to close down a sector where the government is not giving any help, or government is giving pressurizing and giving more and more taxation on that. So the CEO of the company has to decide as to which part of the company is doing well and which part should go in for expansion. So the management qualities are very important in deciding whether we should stay invested or we should not stay invested. What is the competitive position? As I told you, a company, if we must see the market share of the product. For example, let us see some other product like Colgate. Colgate in the toothpaste sector is having a market share of more than 50%. So that is why the company Colgate is doing well. Right? It has got a market share of more than 50%. So anywhere we are investing, we have to see the product. We have to see that the product is very good and the market share of the company is on the higher side. And whenever we are investing, we have to see the industrial outlook. Industrial outlook, why we should see? We should not invest in an industry which is going to go down after 5 years or after 10 years. We should see an industry which is going to remain there for 5 years, 10 years, or 15 years. Okay? Sometimes it happens that company does not upgrade itself. You must be knowing about few examples like that. I usually give an example of Kodak. You know, the company, American company, before digitalizations of things happened, now we can take pictures very easily without having the need of that Kodak rolls also. Everything is digital. The Kodak company made a mistake of not changing to the newer technology. And one company, which was a blue chip company, went down and became zero. So the industrial outlook, we have to see whether this industry is going to survive for the next 5 years or 10 years, or is it not going to survive? Brand state, as we have discussing these two examples, 3M and Colgate, the brand strength we have to see. If the brand strength is very good, then the company is uh, worth investing into. There are some other examples also they are given there. We can skip that and we can go to the next slide. Economic indicator. Among this economic indicator, there are many indicators in economy. GDP is the most talked about, and most of you must be knowing about GDP. You know that GDP of our country is going to go higher and higher, and it is expected to double in the next 7 to 10 years. So it is the right time to invest in our share market, because the GDP is going to increase. If the GDP is going to increase, proportionally the share market also will increase. Total market capitalization is nearly equal to the GDP of the country. So our GDP just now, if it is 3 or around 3, and if it is going to become 7 in next 7 to 10 years, then you can take it for granted that the market also is going to double in 7 to 10 years. Okay, GDP and market is directly proportional to each other. If the GDP is rising, market will also rise. Another indicator is the inflation. If inflation is high, then the banks will try to increase the rate and try to bring the inflation in control. And whenever the bank rate rises, the company which has taken loans will suffer and their profits will go down. So if the interest rate are rising, it is bad for those companies which have taken loan. Some of the very good matured companies, they are not taking loan and they will not be affected by the interest rate hike. As we had seen during the COVID phase, all those people who had taken loan were suffering because there was restriction and they could not continue their business for 3 months. So they had to pay the loan for that 3 months. Maybe they were given just a time okay, you can pay a little later on, but they had to pay. So anybody who has taken loan had a problem during the COVID time. Employment number or the unemployment number. As you must have seen, whenever this unemployment rises, that indicates that the economy is not doing good, and shares market will start falling if the unemployment numbers have started rising. Here in India, we don't get much information on a day-to-day basis, but we are dependent on the US. So US numbers will give us the information whether that share market will rise or fall with the employment numbers. And if the US market falls, at a certain extent, we are also affected. So those are economic indicators. There are many other indicators, economic indicators. Whoever is interested in economic indicators can go to the site, can visit our RBI site and find out about the economic indicators. Or you can go to Wikipedia and find out about economic indicators. and
So,
study it as to how it is affecting it. Okay, can we go to the next slide, please? So there are various sectors where you can invest. And when you want to invest in a particular sector, you have to study about the sector. You have to study whether this sector is going to continue, as I told you in the past, okay, whether this sector is likely to continue for the next 5 years. If it is not going to continue, then you should not invest in those companies. And second is all these sectors, when we are studying, you have to analyze them in a different way. You cannot analyze a banking or a financial sector in the same way as you analyze auto share or you analyze consumer goods sectors. There are different ways to analyze different sectors, and you should learn about it, how to analyze a sector in a different way, and then you can proceed. Okay. The next slide, please. See, in this slide, we have tried to show okay, how to value a different sector. So if you're analyzing a hospital, what sectors, what are the valuation metric you must use? So same metrics you cannot use for banks. In the banks, what metrics you have to use? Valuation metrics, price to book value. So you cannot analyze different sectors in the same way. You have to use different metrics, and this is a ready reckoner chart like thing. So whenever you learn analysis of a sector, you have to be careful and you have to understand that and use the appropriate analyzing tool and study them. Okay, let us go to the next slide. What is moat? In this picture, the lake which you can see, the water you can see in blue color surrounding the fort, that is built to save the fort from the enemy attack. A castle will be surrounded by this kind of moat, and usually crocodiles will be there. So the enemy would not be able to reach the fort. So this thing is called as a moat. So let us go to the next slide. So the same terminology is used here also, and people try to find out which are the companies which are having this type of thing. So as I gave you two examples, like 3M, I gave you an example, is a company which is technologically superior and there is no competition. And that is why you can say that it is a moat company, a company where the competitors are less and you cannot beat this company easily. So there are various ways, various types of moats. Amul or Marico example is a type of brand moat. It is an established brand. Amul, we all know that everywhere we have seen for so many years, Amul is doing the advertisement. And if we try to see how many competitors are there, we'll find very few competitors for them. Some people, they try to cut down the cost of the product which they are manufacturing. Reliance, what they did when they came with for Geo, they came they kept the monthly charges at a very low rate. So lots of people shifted from other uh, companies to Geo company. Vodafone was there, Airtel was there. People started shifting from Vodafone and Airtel to Reliance. That is the cost benefit, because there are other benefit examples are DMart. DMart also, why people are going to DMart? Because the rates are very low. Comparatively, you get it at a discounted rate. So that is called as a cost mode. Some people, government uh, companies, they are regulated, and government does not allow any other people to come there near them. So that is a regulatory mode. Initially, we had here our Bombay Suburban Electric Supply was a government company. Now that has been taken over by a private organization. When it was a government company, things were totally different, and the electricity charges were comparatively very comfortable. Now that the private players have come, the electric charges here have increased. So different types of modes are there, and we have to find out companies which has got a good mode benefit. Competition is less, and their pricing can be good. They can stay in the market for a longer time. Okay, let us go to the next slide. Limitations of fundamental analysis. Initially, we have to take, when we start doing fundamental analysis, we have to spend a lot of time reading about the annual report, reading about the company, trying to find out about the product, trying to find out about the uh, company uh, company proprietors and the CEOs. So that is time consuming, and it is mostly based on the historical data. So all those people who are interested in trading are not interested in fundamental analysis, and all those people who are interested in long-term investments should understand fundamental analysis and go accordingly to the fundamental analysis. The next slide, please. The second way of analysis is technical analysis. Once you have done a fundamental analysis, you know whether this company is good or not, and you know whether you want to stay in the company for a longer time. What will technical analysis help you? Technical analysis will help you to find whether this is the right time to enter or not. What are the uh, price movements happening in the company? What is the volume of trade happening in a company? Sometimes the company would be very good, but the trading volume is very less. What happens is, when you try to sell that shares, you might not be able to find a good buyer for that company during the bear phase. That's a problem if the trading volume is very low. So you have to understand that you must invest in companies where the trading volume is comfortable and people are willing to trade even during the bear phase. Okay, the next slide, please. Case study. Hardik has done a study about DMAT. So Hardik, can you share?
Sure, sir, sure. So good evening, team. So I've been student of Haresh sir, and I've been part of the latest fundamental analysis batch of him. So what I've done is, as a case study, I've done a case study of DMart, So personally, I'm only comfortable investing in companies which business model I understand or products which I have used. So that gives me a comfort before investing into a company. So in this particular case, DMart, I've been user since almost 7, 8 years now. So basically, I believe in this particular company being a customer. Since I am a regular customer and I know the value it offers to the customers, I feel that definitely this company is going to stay for long. For doing fundamental analysis, so I've used a SWOT model, which is strength, weakness, opportunity, and threat. So I've bifurcated it, highlighted and bifurcated points in this particular template. So if we start with strengths, the very first point is it has got a proven business model, which is everyday low cost, everyday low price. So in general, DMart is able to offer its consumers at least 7% discount on the MRPs. Anything you buy across the store. Minimum discount you will get over MRP is 6%. So that has led to customer loyalty and consistent revenues for them. Second point, I have studied its financial performance. So over the years, it has offered healthy profits, consistent and healthy profits, solid return on equity, and also it has got relatively low debt position. So it is virtually debt free. It is able to effectively use its capital to generate profit, which is seen through ROE and ROCE. I'll come to what is ROE, what is ROCE. In terms of market cap, it is market leader currently in its segment. Current ratio is 4, which means that it has 4 times the cash compared to its current liabilities. So it has got enough cash to cover its working capital requirements. Hence, it doesn't need any debt from bank loans or any other people. EPS stands at 39.53. EPS is earning per share. So ROE is basically how effectively company is able to use investors' money, shareholders' money, and turning into profit. So it has got ROE. If you see, it is on an average last 5 years is close to 15%, which is decently good. ROC is return on capital employed, which tells us how a company is generating profits from its total capital, which includes both equity, which is money from the shareholders, as well as debt, loans, and other borrowings. So even that, it is able to consistently perform at 19.87, which is again close to 20%, which is again good. Earning per share is profit a company makes for each share of its stock. So basically, you divide total profit by number of shares. So earning per share stands at 39.53. Other strengths of DMart is it owns most of the stores, so it is not on a rental model where he has again it has to borrow money for paying rents and other things. So most of these properties are being owned by DMart. And also in terms of store locations, it usually doesn't have stores inside the malls or very peak areas. Usually you will find DMart store next to a catchment where the rentals or property rates are not that high, but it still gets the customers. Coming to next strength is the management expertise. So DMart or Avenue Supermarket is led by Radha Krishnadamani, who himself was an investor for a long period of time, turned into a businessman. So if you see the promoters shareholding in the company stays at 74, close to like 2/3 of the company is owned by him. And also company with zero promoter pledge. So here, basically promoter has not pledged his shares to any bank or something to get a loan. So that 74% is with him. Also, in this particular point, I would like to just highlight the importance of a management. So if you compare DMart versus Big Bazaar, they almost started together. So Big Bazaar started in 2001, DMart was started in 2002. But Big Bazaar took a very aggressive expansion strategy, and DMart took slow and steady strategy. So after 20 years of their existence, today if you look, DMart is like a kind of market cap of 2.5 trillion rupees, whereas Big Bazaar was sold to Reliance. It could not sustain the competition. So similar beginning, uh, operations in a similar space, but again the Big Bazaar took huge debts for expansion, which he eventually could not pay, whereas DMart from day one was debt free, started slow, invested whatever profit it earned into the business, and growed steadily. And it's one of the very stable companies these days. Another advantage it has is efficient supply chain. Uh, since it buys in bulk and it has got customers, so obviously even supplier terms are favorable. And also one of the factor they uh, pay cash to most of their suppliers. So there are no kind of credit days. Even that also gives more discount to them, and that discount is passed on to consumers. It has also got private labels, which are also decently doing good and which are of higher margins. It has got good operating margins, and I earlier highlighted current ratio is 4, which is like it has got 4 times the cash than its current liabilities, short-term liabilities. Coming to weaknesses, so DMart has a limited online presence currently, so it is majorly dependent on its physical stores. So again, that is a concern in case something, so something any again lockdown or something happens. So people usually consumers move to online space. They would prefer ordering online, which is one of the weaknesses currently of DMart. Currently, it is highly valuated, so the stock prices are trading at premium, so leaving less room for investor to invest and earn profit. Geographical concentration is basically DMart or any supermarket is really mainly found in Maharashtra, Gujarat, Andhra Pradesh. Currently, it is expanding, but it is expanding slow. The business itself is a capital intensive expansion because uh, if you want to expand fast, you need money. So again, they want to remain debt free. So that is also hampering their expansion plans. It has got high PE ratio. Basically, PE is basically uh, so high PE ratio means investors are paying more for each rupee of earnings. So the stock is more expensive related to the earnings it generates because of its high stock prices, basically. Another weakness is it is not giving any dividends to its investors currently, and stock is trading at 4.5 times, 15 times its book value. Business opportunities, what it has is obviously e-commerce expansion. Another opportunity is expanding in tier 2, tier 3 cities. Another opportunity it has got is diversification. So this opportunity will all generally find in their annual reports where they have laid out what next they are planning for next year in terms of their expansion, business expansion. So this is something taken from there. So they want to expand into pharma, and also they want to expand their private labels. So that will give you the more margins. Threats currently is rising competition, is very well known, both physically and in commerce. E-commerce, you have Swiggy, Zepto, Zomato, Grofers, JioMart, Reliance Retail. So competition is intense in this particular segment, groceries. Um, these are all hypothetical regulatory changes or any economic factors or any supply chain disruptions. So this basically gives you a snapshot of a company, and obviously you'll have to dig in more before you take that step of investing into a company, but at least this will give you a clear picture of what business you are investing in and the future of that business you feel uh, it will have in coming future. That's it, sir.
Okay, thank you very much. Okay, so if is anybody interested in doing a case study just now in any company? Any company you want to study it on your own just now? To try, maybe Hardik will help you immediately. Where to start, how to go about. Okay, then if there are any questions, I would answer them. Yeah, there are some books if you want to read them. These are the books recommended for long-term investors. And these are the websites which are recommended for us to go about in the market. Money Control, Screener.in, SEBI, and NSE official sites. And if you want to understand fundamental analysis in a little deeper way, then you can take a online classes from NSE. NSE is conducting online classes also, which can be done at our convenience, and we can study fundamental analysis on that site, online site. Thank you very much. If you want to contact me, my email address is given here. You can write to me and we can discuss if you have any doubts. Yes, PowerPoint presentation I have already shared in your group. So all the slides you can go through. If you have any doubts, you can discuss them.
Yes, doctor. Thank you so much, doctor. Thank you so much for your nice presentation and valuable talks.
I think there are no questions. So we can.
Any questions?
Sir, very beginner I am. So just wanted to ask, where will we get all this for fundamental analysis? Where will we get the information about the company?
Hardik, will you show them some sites where they can get information about the company?
So,
You
ma'am,
can go to
Money
screener.in or Money Control and show them the information where you can get them. Hardik, are you there?
Yes, sir. Yes, sir. I'm showing you.
Yeah. The question is, where do you find about the fundamental? About the company?
So, ma'am, Money Control is very good site.
Okay.
Just type just here. So right now I've done I want to do Demarca analysis. I want to just start and see what business is.
So here you get
Here
the
it is,
strength,
yeah, strength,
weakness,
weakness.
all the information and the prices, today's high, low, what is the P ratio, what is the face value, what is the yeah. How much is the sector P? All this information is given on money control. We are interested in seeing the chart also. The chart is also available here. You can see the price for a long, long time. We for last 30 years, what is happening in the company, you can see this company is not that very old. So maybe last 20 years, we will to see the chart. As you go down, you can see the projections given by experts. Here the projection of high, mean and low is given by the experts. And the analysts also, we tried how many analyses are in favor. 42 are in favor of buy and then 13 are in favor of sell. Others are equivocal. So you can see the earning per share for last 3 years and the expected in the for the next 2 years. Estimated earning per share. The estimated earning per share is going to rise. If the estimated earning per share is going to be rising, then the share price also is most probably going to rise. Click on net profit. So here you can see the net profit graph also. The net profit graph also is likely to showing the likelihood of going high. Similarly, if the net profit is rising, even the revenue also should be rising. Please show the revenue chart, expected revenue. This chart, here you can see that the revenue is expected in 24 and 25 is higher than what it was in 23. So this is one of the site where you can understand the fundamental analysis of a company. And please show the second site also, the screener.in also useful.
Yeah. So before I go to Screener, another couple of sites. One is Wikipedia by default. So even that is a good site. And another site is Investopedia. In terms, in case you want to learn the terms, what is P ratio, what is earning per share. In a very late term, they have explained it very well. You say Wikipedia pe you type any supermarket. So on Wikipedia, you'll find what is history, who is the promoter. And in footnotes, you will find other terms. What is, if you want to say what is Nifty 50, you just click on Nifty 50. So Wikipedia will give you a glimpse what is Nifty 50. If you want to say what is NSE indices, it will show you what is in NSE indices. Then similar way, you can just keep on researching. The more you read, more clearer the concepts gets in your mind. And another site was this Investopedia. For a beginner, it is very good site in terms of learning the terms. And a very beautiful site is the screener.me. If you see, it gives you a snapshot of a company. How many stores it has currently. What is its revenue breakup? And also you can see the dashboard of key ratios. What is the market cap, P ratio, what is ROC, what is ROE.
And show them the annual report where they can download it. Go down and show them that. Annual,
Yeah.
go down. Madam, yes, here you can see financial year report. You can
Yes, sir.
download this. You can download this report, and you will get all the information about the company. What are the products of this company? Who are the owners? Who is the CEO? And things like that. Okay.
Yes, sir.
The annual report is the best place to find out about the company.
Okay.
The more you read about more you read on the annual report, you read at least 50 or 100 companies, you will be very much good in share market if you have read annual report properly. Every year you do not go through the details of the annual report. Things would not change much in every year. So at least one time you have to go in detail.
Sir, you said day trading is not good for us since we are practicing and all that. So, which sort of trading is good for us?
Long-term investment.
Okay.
If I'm busy with my patients and I don't want to be disturbed, then I should not be doing day trading. Day trading requires your full-time attention. You should be on the screen most of the time. And day trading studying is also in a different way. If you're doing day trading, you do not bother about the company's performance or who is the owner or who is. Day trading is basically on technical analysis and on strategies. The moments are like this, so I have to do this and I have to do that. So that type of strategies you have to do.
Thank you, sir.
So which portal gives minimal brokerage charges, sir?
Zerodha is zero brokerage.
Zerodha. Okay.
And there is 5 paisa, which is only charging 5 paisa per broker.
So this Ind Money, that's an app.
Mari?
Ind Money, IND Money, there's an app like that. Is it?
I do not know about the app.
Okay. Thank you.
So there are many apps available for us to learn. Zerodha Varsity is available where you can go and learn. The Varsity app is available free of charge, and you can download Zerodha Varsity and start learning. Videos are there, so You can study over there. Different types of things are available. Even they will explain if you want to study about trading, you can read over there.
Okay.
Lot of learning material is available free of cost in many of the apps available online.
Thank you, sir.
Any other questions, doctors? Okay, doctor. You can end the session. Give any other ideas or any other this thing. You can tell and close the session, doctor.
Okay, so we'll end the session here. There are some 3 chats. I'll go through the chats. No, it's not so important. Okay. We'll end the session.
Thank you, doctor. Thank you so much.
Thank you,
Thank
sir.
you, sir.
Thank you.
Thank you, sir.